2, 1, rock and roll.
Here we go. Excellent. We are live now.
We are.
Okay. Can't talk about what we were just talking about.
Nope.
Okay.
I had you muted anyway.
Yeah, good. I need that. I forgot to tell you, today's my mom's birthday.
Well, happy birthday,
February
Mom.
7th. Yep. Happy birthday to my mom.
They're in Florida right now?
Yeah, they're down in Stewart.
Of course they are. It's freaking winter. Yeah.
Right? I don't blame them. It's a snowstorm out here. It's too bad we can't turn the cameras around. It's a couple inches here at least in the
Yeah, when I was leaving the house this morning
DC
the first
suburbs.
time, so we did the monthly webinar call. If you're a member of our a subscriber to the site, we do a call for members only. It's like a webinar kind of a setup, right. But it looks much like this, right? And so anyway, I have to have this computer for it. Oh, yeah. I left it at home and I ran back home, ran back here, and it's snowing like a mofo. Yeah, it's really funny. I'll just tell them the same thing. Have you ever seen Homeland in the series Homeland? It's so funny. The one guy that's like the right wing, blogger, podcaster, whatever he is. Yeah, I've never seen the show, but I know what you're talking about. Yeah, it's good. It's a good show. But he's on the run and he's trying to find a place that he can do his podcast from, and at some point he just barely under the wire, gets all the wires hooked up and gets on the show, and that totally is what happened with us here this morning. I literally got the computer up and turned on, and 10 a.m. is when the call was, and boop, we were live. It was great. And if we didn't tell anybody, nobody would have known. Yeah. But we got to share. We told everybody. We're transparent. Yeah, we are. Try to be. Yeah. Speaking of transparent, and before I forget, Facebook, which is becoming my arch nemesis, the Facebook group. So, probably a lot of y'all that are on this, that are watching the show here, are part of our Facebook group, and if you're not, you certainly should be. But we have, I don't know how many thousand people now in the Facebook group, and over 8,000. Yeah, so everybody who comes into the group, you have to ask, right? It's public, but it's closed. So what that means is we have to allow you to get into the group, right? And we have a series of questions in there because we want to know that you have a TSP account. We want to know if you're a federal or government employee, and we want to know that you'll follow the rules of the right. That's
the group,
the big thing.
Right?
Yeah.
That's a big one. A lot of people don't answer that last question for some reason. I don't know why. So a lot of people will answer the first couple questions, and then they don't answer the last question, and that makes me go back and look at their profile and try to find some nugget of connection between military or federal to justify me pulling you into the group. Right.
Otherwise, why would you want to be in our group? Right. Well, I'll tell you why. Oh, yeah. So you can spam.
So you can spam it, right? So there's a whole lot of different ways of spamming. Okay. For the past several months, people have been spamming it because they're trying to hit up the group to solicit other financial services. Okay, that's one way of spamming. The most recent way of spamming for me has been people from other countries, and they answer the questions like hello, whatever. They're not answering the questions. Right. And so it makes it pretty obvious to me that they're not real people.
Yeah, it's automated bots or something.
Yeah, it's bot. Right. So I decline them, right? Every once in a while, some one of those knuckleheads get through. Okay?
Because you have to approve every
literally every single every person I have to approve. So every once in a while, it falls through my net, and that happened this past week. And one of these hooples put up some kind of sex toy thing in the comments or whatever, and
but you caught it.
And I didn't catch it. A series of people that are in the group, they're like, which is great because people in the group will report things that they think is wrong.
Help us police it.
Yeah. So it helps a lot that you guys are kind of policing that group. It helps a lot. I cannot do all of it on my own.
Yeah, there's no way we could read every comment, everything. I mean, we try, but yeah.
The comments are very tough. Once you're in the group, I have to let you in the group, but once you're in the group, I also have to approve the post. If you try to post something, I can I decline that, and I can delete you out of the group and all that. But if you comment on something else, I may or may not see that, right? And you may not see it. So the comments are tough for us to keep our arms around.
We appreciate you guys helping us keep our arms around. If you see something that looks shady or fishy,
just help us ping the person. Yeah. We always give the person the benefit of the doubt.
Yeah.
Always. I mean, you message them offline and say, hey, did you really mean to do this? Or,
right.
Because if you do it again,
there's some of that.
Yeah.
But the bots definitely, they're just gone.
Yeah,
they don't get an email. They're just gone. Right. So, okay. Because I didn't want to, I wanted to make sure we got that out. All right. And it's Super Bowl Sunday.
It is.
Yeah. Haven't even
I'm probably going to fall asleep before it happens.
Yeah, it's been a busy day already. But that leads us to our two quotes for the day today.
Dum-ba-bum.
Okay.
Oh, you got both the guys up there.
Of course. Because we want your team to win.
Yeah.
Right? Whichever your team is. All right. You want to know which ring is my favorite? The next one, says Tom Brady.
Of course he would say that.
Of course he would. But that's great because the next, for us, you want to know which trade is my favorite trade.
Yeah, it's the next
one.
Absolutely.
I mean, we're going to get into it, but basically the end of every day is the beginning of a new day. So we did an alert last week, and we took we reallocated for the reasons that we'll get into, and now you are where you are. So kind of much like Tom Brady here, regardless of what you've done in the past or where you are now, what trades you've done, you are where you are now, and the next one is the most important one, right? So that's all for him. I'm a Tom Brady fan. I'm from Boston. Every experience, good or bad, you have to learn from, says Patrick Mahomes. Couldn't agree more, right? I mean, I definitely am learning every time I turn on my computer and look at a chart. And if you're not learning every time you look at a chart, then you're basically kind of wasting your time. And so obviously Tom Brady and Patrick Mahomes are huge examples of the pinnacle of their sport and their craft and all that, and they're still like super humble and just down in the weeds and keep moving forward.
Right. Good quotes.
Yeah. Applicable anyway. All right. The market this week.
Volatility and drama.
Yeah, and continue. So this is the same slide from last week. At least the beginning of it is, right? Volatility and drama, and it continues. Because this week, 5 days in a row, the market was up. And everyone's like, woohoo, the market's up, it's great, right? Yes, that's true. But it's coming from last week's decline. So last week, the C fund is down, over 3%. This week, it's up over 4%. S fund's down 4%, up 7%. I fund's down. It's up this week. The volatility is there. If you can't stomach the volatility, you need to either be in the G fund or be happy, be okay with the volatility and stay in the stock funds or whatever. But volatility it's tough. The next thing was GameStop. So actually, it's kind of funny because this week was kind of the end of it. It almost seems like it's been going on like for quite a while. It was basically 10 days, and I got a pretty good chart in here of the 10-day round trip for GameStop from $50 up to almost $500 and back down to $50. It's unbelievable.
Yeah, and just so most would know that if you didn't watch the last show, we kind of got into it, mostly just because we had so many people asking about it. So it really doesn't have anything to do with the TSP, but because it was so newsworthy at the time, and we think we'll just
Yeah, I just wanted to do a wrap up of and kind of show the Elliott wave, chart of it. It's pretty interesting. Then we're going to get into a question that we had. It wasn't so much a question, but it did actually come up as a question on today's member webinar. Moving averages. Like, we use the 10, 50, and 200-day moving averages. Are there other lines that you could use that would give you an ability to manage your risk in a different way, let's say? So I'm going to do a chart of the 10, 20, 50, and 200-day moving averages, and we'll kind of look at what risk you would have to absorb to use the different to use longer term moving average lines as your kind of line in the sand. And then we get the regular 6-month daily charts. Okay, GameStop. So here's the wrap up for GameStop. You got back on January 22nd, right? So you got the 23rd and 24th are the weekends. So this is literally 10 days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right? 10 trading days to the 4th. You went from $50 right here up to almost 500. Right? It was above 475 and back down to $50. They'll be talking about this in the history books. But if you were watching it on a minute-to-minute basis, you got 1, 2, 3, 4, 5. It's a super clear Elliott wave pattern, right? And the reason you got this giant gap right here, because the chart is 15-minute ticks. So a tick is the vertical line, okay? Each vertical line represents 15 minutes of time. So from this 15-minute block to that 15-minute block, in that time frame, it gapped up that much, which is why you don't see it. If we did like a 1 minute chart of that day, it wouldn't look like it. You'd see the things coming up, right? So that's why we have a gap. But you would literally have to be sitting in your underwear in front of the computer, literally live, to be able to do this.
Would you have to be in your underwear, or could you be wearing pants?
If you are actually one of the Reddit guys, I don't know if I should say this, but I'm going to say it anyway. If you are one of these Reddit guys that are following this thing, and you're at home and you're doing this thing, you're definitely in your underwear.
Because you don't have time to get dressed anyway.
No, and you don't care. No. So 1, 2, 3, 4, 5, right? A, B, C. Now, is it possible that now that we're back down here at C, from an Elliott wave perspective, does it go 1, 2, 3, 4, 5? Yeah, if it was moving on fundamentals that if there were earnings that justified it and all that, then yeah, it could. But I would not be looking...
Highly unlikely.
Yeah, very highly unlikely that we're going to see any kind of movement. And, I don't have the logarithmic scale up here, but even if you did want to, let's just say you did want to do it. So let's zoom in for a second. You got 50, right? Where on the left-hand side, so on February 5th, it popped higher and then came back down, but didn't get below the low of the day, right? And then at the end of the day, it popped higher. So where it says 8 February, it closed at the end of the day on big volume. That last 15 minutes, because this is a 15-minute chart, the last 15 minutes, it was big volume and the price moved higher. So if you're looking at this chart, this is actually a great time to buy it, right? The problem is the risk that you're taking is the prior low is at $50 and the price right now is at $63.77. So on a percentage basis, that's a lot of risk to be willing to accept, because if I was going to buy this, my stop would be $50 or somewhere below 50. So I'd have to be willing to accept that much risk. I don't want to go any further down that rabbit hole. But it is a pretty interesting chart. And it's interesting that it does play out in the Elliott wave pattern. All right. I'm going to hope we never do another GameStop chart ever.
ever. But who knows?
Okay. Training time out. All right. So here's an 18-month daily chart of the C fund. If you wanted to, and I've done this, the reason I use the 10-day, the 50-day, and the 200-day is because the 10-day gives us a line that's close enough to the price that allows for some volatility, but doesn't put too much of my money at stake, right? So my number one rule is don't lose money. My number two rule is you got to be in the stock funds when the market's moving higher. But my number one rule is don't lose money. So the tighter, meaning the less, the shorter time frame your moving average is, the more you're gonna get in and out of the market. And so we only have 2 moves a month, so you have to give it a little bit of flexibility, and you have to have your trade in by noon to get that day's closing price. So there's a lot of things to consider, and I have spent quite a bit of time trying to figure out the best moving average line that will allow for my risk tolerance and circumstances. Will allow the flexibility that I need, and the support levels to kind of make sense for me. Okay, so here's an example. If you were, let's see, I'm just going to draw the arrow, and I'm going to have to talk through it. So back here in February, right? If you the blue line is the 10-day moving average, and the red line is the 20-day moving average, green line is the 50-day. So we got out basically right where the arrow was pointing at. But if you waited until the market gapped down through the 10-day moving average and you got out, you would have gotten out, pretty high. It would have been, what's that number? 3,400. You would have gotten out a little bit under 3,400. If you had used the 20-day, if you had waited for the market to come down through the 20-day, when it did that, it went through both the 20-day and the 50-day at the same time, on the same day. Right? Let me get out of this and kind of point to it. So the blue line is the 10-day, right? If it broke through the 10-day and you got out, you would have saved quite a bit of the market falling, versus if you waited until it went through the 20-day. So it just depends on how you want to do it. I mean, everybody's got to kind of pick a moving average line that that works for your risk tolerance. Sorry, bear with me for a second. Okay. So that was probably the most dramatic example actually on the chart is that one. You could also do it on the upside. So if we're down here, right? If you get in when the market gets above the 10-day, right? You would have gotten in right there. If you wait to get in until the market's up above the 20-day, then you're losing the gains because you're not getting in until there. So depending on how often you want to look at the market, how risk averse you are, basically what you're comfortable with in your circumstances is how you want to set up your charts and what kind of moving average lines you want to use. And so for me, 10-day, 50-day, 200-day kind of works the best. If you're not looking at the charts very often, you might just set up the 50-day, which is the green line, and the 200-day, right, purple line. So you might say if the market, closes below the 50-day moving average, I'm getting out. Or you might say if it gets to the 50-day, I'm going to assume that it's going higher from there because it's going to be a support level, because a lot of times it does. It hits the 50-day and finds support, right? Sometimes it doesn't. It did here. There are no guarantees. These are all guidelines. All right. I don't know what else to talk about this. So hopefully you guys get the idea. The 10-day, 50-day, and 200-day are not the only moving averages you can use. You can make it as tight or as loose as you want. You need to make it fit your circumstances and risk tolerance. Okay. So, what happened on the charts basically this week? Here is Friday of last week. We hit the 50-day moving average, got support, moved higher on Monday. On Tuesday, moved higher again. S&P closed above the 10-day moving average. On Wednesday, it sort of had a flat day, and then on Thursday, had the follow through, and that's when we got back in. So, from my perspective, in my risk tolerance circumstances, I got back into the market when everything made sense for me to do it. At least that's from the perspective of the C fund. If you're a little bit more risky, you could have said, okay, it hit the 50-day right here. I'm getting back in. And just know that if it broke below the 50-day, you would probably get back out. But as of right now, where are we? Indicators, MACD crossed. The MACD stochastic down here just turned positive. You get the RSI moving higher. And we are now actually at new all-time highs. So nothing in the chart indicates that anytime soon the market rolls over. We don't have a crystal ball, but you want to be in the stock funds at this point. S fund, very similar. Right? You got histogram right there went positive. MACD crossed positive. RSI looks good. New all-time high on the S fund. Okay. And all of that happened. That's why I draw this horizontal or vertical line, because it all happens on the same day. That's the day you want to get in. Or at least that's the day that, so, ideally you want to get in back here, right? But the question is, why would you? This is when the market's still falling. You don't know that it's going to turn back up. Once you know that it's going to turn back up and is more likely to move in the direction you want to go, for me, that's when I want to get in. I fund looks really good as of yesterday. We had once we got below the 10-day moving average, we have a lot of resistance there at the 10-day moving average. But we got support at the 50. And then on Friday, had a nice breakout above that 10-day moving average. Not quite there yet with the indicators, right? But we're getting there. RSI looks pretty good. MACD hasn't crossed yet, and the histogram is still not crossed yet. But if you are interested in the iFund, now is probably a good time to get there. We're also not yet back at new all-time highs on the iFund. So, and the volume, right? Not great. So, definitely some things that would give you some optimism in the iFund, and some things that you would rather see, especially the volume. I would rather see support higher prices, but we didn't get that. We did get the volume on Friday was a little bit higher than Thursday. It would have been nicer to see a bigger volume move consistent with that big price move. All right. Strangely enough, this could be the fastest show ever.
Holy cow.
Yeah.
I thought you had a bunch of other stuff to talk about.
I have this weekend.
I was fixing a couple things on the website while you were going. Usually I got so much input, I'm like, I'm just going to let him go with it.
Yeah, this weekend there was so much stuff between the GameStop thing and the alert that went out, and there was a ton of stuff, and we get the newsletter, we get the monthly webinar call for the members of the site, and we got the show, and I have I don't know 25 charts saved in here, and I'm trying to figure out which things I want to talk about on which medium.
Right.
And so I would highly recommend you guys don't just watch the show, read the newsletter.
Yeah.
Go to the monthly call, because it's.
Yeah, well, I mean, they're all meant to be not the same, so
they're all different.
Yeah, you're not going to get all the same things, and particularly for the public show, we do our best to give you some great knowledge here, but we're pretty transparent about it. We have a service that gives you a lot of analysis and a lot of education and a lot of knowledge that you can use that we're not going to put out on the regular show, and that's just the way it is. But we do give a lot of value here on the show, just by going into those charts. I don't think I know another, podcast or, kind of thing like this. Definitely not about the TSP, obviously.
Right. I haven't found one.
Yeah, even for just market stuff, right? There's very few people willing to give out free information about what you should be doing in the market.
Yeah.
And we're giving out a lot. But we enjoy it. I mean, it's good. We haven't been getting as much feedback lately on the show. The viewership's gone up a lot, and we treat this kind of like a podcast. We get together, we talk, we BS a little bit, we get you some charts and stuff. But at the end of the day, if you think there's something else that we could be talking about or add to it or whatever, feel free to comment on the videos. You can comment on Facebook if you watch it there. We also put it up on YouTube. We kind of hit our stride. We finally got ourselves a little podcast studio here. We finally got all the kinks worked out, I think, with the video and the audio and all that. Because the first few shows, if you go back and watch those, it was rough.
It was rough. Yeah.
It was rough. No equipment was available because of COVID. So even if we wanted to, like these different things that we use, they weren't even, they didn't exist. So it's been a fun ride, but now we're kind of hitting our stride and we're here. So now it's about the content that we put into it every time. Yeah. And, give us some feedback if you want to see Jerry, dance on the table or something.
That may or may not happen.
It depends on how much Jameson we got.
That is true. I
See,
got my
we
whiskey
are
hat
transparent. That's right. But did we, what is something that came up on the, real quick, we don't have to get too deep into it, but let's talk about this real quick where someone made a comment who watched the webinar earlier that we did this morning. Now, those are live, so it's like live to the members. It's not recorded. But we do record it and then put it back up for people that missed it for members. It's on our members only page, or member dashboard. Anyway, basically it was, I'm looking at a lot of different ways to manage the TSP, right? Because we always talk about there's more ways than one. And kind of why did you land on this way? Like, is there a 30-second, 2-minute answer to that question?
Sure. So the question really was, hey, I follow a bunch of different things on Facebook, and one of them is seasonal strategies.
Oh, that's right. Yeah. Seasonal.
Which is I look at all that stuff too. Of course, why wouldn't I, right? Seasonal strategies is a pretty interesting, I don't know if you get there through Facebook and it takes you to a website, and basically anybody that has a methodology, it assigns you a number, and that methodology now is in their database, and you can pick from all these different methodologies, right? And they call it seasonal strategies. So it's a pretty cool site. I kind of liked playing with it. It's a pretty cool site. Some of those strategies have worked historically really well, right? And there are other ways to do this. There are other sites on obviously on the internet, but other Facebook groups and things that are specific to TSP. What we do here is technical analysis, right? Most of the other groups are back testing their data and not justifying, but extrapolating what's going to happen going forward based on back testing the data. Okay. I can back test my stuff, but it's basically looking at the decisions that I made real time, each time going backwards and figuring out where I could have done better. Basically, that's my version of back testing.
Right. Because we do it as sort of a quality control thing.
Yes. Yeah. That's kind of a better way to look at it, because you can't back test decisions that you make real time.
Yeah, that's kind of tough.
You can't. Yeah. It doesn't work.
Well, we actually hired a data analyst to come on, and we talked about this on the webinar, but I don't think we talked about it yet here. Where we hired a data analyst. She's helping us, look at these things and being able to look at it faster. Crunch the numbers and sort of big data kind of stuff to go, what could we tweak here, there to kind of get better, right?
There's a lot of ways to play this game, and the more big data, actually AI gets into it and all that, you can, just for a simple example, you can say, over the last 100 years, how many times when the S&P 500 hit its 200-day moving average did it move higher? And if the answer is 99% of the time, then you probably want to buy it when it hits the 200-day moving.
It's a decent indicator.
Yeah. I mean, it's things like that.
But that is also technical analysis. Technically speaking,
sure. Yeah.
It's technical. It's not because most of you would know this, but in case you don't, there's basically two types of analysis when it comes to the market. It's fundamental analysis, technical analysis. We're on the technical analysis side,
right?
Because price is all that matters to us.
Yes.
Not all that matters, but that's the
right. So the other part of the question was, why do you do what you do? Yeah. The answer is because my dad taught me to do this when I was a kid, and I've been reading the technical analysis stuff for 20 plus years, and
probably longer than that. You're a little older than that.
Oh, 30, 40. Yeah. I've been doing this thing for a long time.
Yeah.
And it makes sense to me. And so that's why, why do you play basketball instead of baseball? Because baseball makes sense to me. And what I mean? So this makes sense to me, and it gets reinforced because every time not every time, but I watch the news and, you look at things like GameStop. Like if you're a fundamental analysis guy and you look at GameStop, you just throw your hands up and go, I can't play in this game.
Right.
Because there are no underlying fundamentals that justify any of that stuff at GameStop, right? But it was the same thing in the NASDAQ in 2000, from 98, let's say, 98 to 2000. You were doing the same thing. You're throwing your arms up going, I go with the trend and hope that it keeps going higher, or I don't play in the game. And so like Warren Buffett famously did not play in that game because he's like, I can't justify these numbers, so I'm not playing in the game. And famously, he did not get the gains that the NASDAQ bubble had from 98 to 2000. But he also didn't get the losses on the other side when it dropped 75% of its value.
Yeah.
Anyway, technical analysis is the thing for me. It's not fundamental.
Yeah, and I never understood any of this stuff till I met you. And as I've become more and more educated, to me, if I can figure out a way to wrap my head around why I would make one decision versus another. I never liked watching the fundamental, folks on Bloomberg and CNBC, talk about earnings and talk about all the things that were happening in the company, and I'm like, yeah, but I mean, that you can't. It's hard to use that as a decision point, right? Unless you can't consume. You can only consume so much information. Right, but when you throw an Elliott wave pattern, or you look at the Bollinger Bands, or you look at it's
real.
Yeah, and I was an intel analyst in the Army for a little bit. Not really, but they sent me to the school. But anyway, that's a whole other subject. Talk about that. The point is an analyst is an analyst. You go with trends and patterns. Yep. As law enforcement officers, we did that, right? And so trends and patterns are your friends, and that's what you have in technical analysis is. Look, if there are 17 indicators or 6 indicators that say this, I have a higher confidence level that X is going to happen.
Yep.
Right?
Yep.
Just like we do in other things where we say, there's 6 indicators that, bad guy's going to do this. Well, it's probably going to happen.
Yeah.
That's the same thing we're kind of doing. So that allowed me to wrap my head around why technical analysis works.
It's funny because when, we used to own, you guys don't know, we used to own a CrossFit gym. We had all kinds of indicators that which you need when we yeah, right.
You don't get a body like this doing CrossFit.
We had all kinds of indicators that showed the sort of health of our business at the time, right?
Yeah.
And if you looked at any one or two of those indicators, you might expect, profits to go higher next month or to go lower. The indicators are really important in a business, but at the end of the day, what matters is how many, for us, it was how many people came through the front door and bought the membership at the gym. But you can't look at individual indicators in a company and say it and buy or sell the stock based on that.
Right. Well, I always thought of it as like I like to talk about narrative a lot, how narrative drives things. And so if I'm good at making a narrative work in my favor for a particular stock decision,
sure,
I can easily convince you that it's a good idea.
Well, they did it on Reddit.
I do, exactly. So that's not a way I want to get my, that's not how I want to make my choices, right? So that's what really made me kind of buy into technical analysis, even though, I still don't have all the fundamentals in my toolbox. I don't need it because I got you. But the more I learn about it, it is even just the little things like just the trend lines, right? And you got the 10-day, the 50-day, the 200-day. Those things are simple enough to wrap your head around. Where if you're the average investor, particularly for us, because we're not day trading, we're not going in and out all the time. It's enough. I mean, I'm doing this. I use these same rules in my IRA.
Sure.
That we use in our TSP, and it works.
Yep.
It's the same thing. So it's something that I've noticed that it's repeatable, right? And I think that's so for me answering the question that she asked for you, right? Is like why did I buy into this?
Sure. Yeah.
The way that you do it, it's because it was repeatable.
Yeah.
I was like, okay, well, if you can do it every time the same and it works, then that's the one that works.
Yeah, I mean, this none of this is 100%, but if you could apply technical analysis to roulette in Vegas, you'd make a killing.
Yeah, if they let us chart that stuff.
Yeah, oh yeah.
I think some people have figured it out. They just don't tell us. All right, we completely sidetracked the conversation.
That's okay.
Yeah, but hopefully you guys stayed here till the end. We made it to our 30-ish minute mark.
Yep, perfect.
And we're going to put this out. We'll know it'll already be out. But put this out early today because it's Super Bowl, and it usually comes out at 6:30, and nobody's going to watch this at 6:30.
No. We're not going to be watching at 6:30.
Yeah. Exactly. All right. So hope your team wins.
All right.
And call it a day.
Call it a day. Have a good one.
Bam.